I guess I want to start with, we have seen kind of a mixed picture about the source of strength for the big banks' earnings. Anything jumping out for you on the two latest here, Goldman and Morgan Stanley, in terms of what they didn't get right in the quarter?
Well, I mean, I think the reason the stocks are up today is we saw, specifically in investment banking, quite a bit better performance from these two guys than A, we were expecting, and B, we saw from more of the traditional banks reported before them. So these are pretty solid results, though it is worth noting they're solid results versus a lower bar. Most of us took our estimates down coming into the quarter. I think the concerns is kind of, as you look forward, is this recovery, especially in some of the capital market space, has been going on for a while. There's some concerns that we kind of already seen the best days of capital markets related revenues, or is there kind of more good news and more revenue strength to come?
Is that why we're seeing financials these days underperforming? Even Morgan Stanley's CEO, James Gorman, talked about the underperformance of the stock, calling it bewildering. I mean, stocks are rising today, but will this keep up later as we go through the year?
Well, it's nice to see the rebound today, but, you know, on a one-week basis, you still see Morgan Stanley, Goldman Sachs down. So it's been a tough week before that. I think with financials in general, and you can extend it to the banks, what people specifically are thinking is, okay, the environment's pretty good. Things are good right now. What's going to get better potentially next year? Kind of what are these stocks going to do for an encore fundamentally? And that gets to be a tougher question to answer. I don't think the underperformance we've seen is kind of reflective of anything we're really seeing in the market or problems right now. It's more things have been really good, and, you know, kind of what can they do for an encore? I think there's potential for more of an encore than the market's given them credit for. But, you know, I think it's become a bit of a show-me story as far as that goes for the banks.
Of course, we mentioned BlackRock, and it is tumbling today. This one does have some bad news. It looks as though institutional investors are feeling a little bit uncertain based on the inflows at a low level, right? Lowest since 2016. What's your take on kind of, is this a place to avoid with this level of market uncertainty out there over the coming months?
Well, I think the environment we're in should actually still be pretty good for, I think, kind of private equity and alternative investments, right? I mean, that should still be decent places to be. It's certainly it's tougher in kind of your traditional asset management, equity, you know, mutual funds and stuff like that. But to the extent you've got exposure as an asset manager to some of these less traditional asset classes, that's still probably a good place to be. You get a lot of volatility, but I think there's potentially still some more good news to come there.